Hello, everyone. This is Roger Knecht, and we're having a discussion about building the premier accounting firm. This podcast is dedicated to helping accounting professionals have a successful accounting, bookkeeping, and tax business. I'm your host, Roger Knecht, president of Universal Accounting Center, and I've been working with accounting professionals now for more than 20 years, helping them actually start and build their businesses, offering quality accounting services to ensure that they get paid what they're worth. The other thing that I'd like you to understand is that Universal Accounting Center is the sponsor of this podcast. Universal Accounting Center, since 1979, have been working with accounting professionals to certify their skills, offering the training, resources, and support that are needed in order for them to be in business for themselves, but not by themselves, giving the coaching and mentoring needed to actually implement things properly and effectively to get the clients that you're looking for, and most importantly, have the business that you've always desired to have. Now, today we actually have a special guest. It happens to be Alan Long. He's a CPA who works with Baldwin CPAs and is the managing member of over 40 years experience in the firm. Alan has extensive experience in auditing and has served on multiple boards of various organizations and associations related to peer review and auditing standards. He currently serves as a member of American Institute of Certified Public Accountants Auditing Standards Board, and he has been an AICPA instructor and happens to serve on a variety of boards, but loves giving back to the community, as you could imagine. He actually participates in a number of things, both in the industry and community, but most importantly, enjoys time fishing and hunting and being in the great outdoors. So I can definitely relate to that. So Alan, as we get started, thanks for being on the show.
Thank you, Roger. I'm glad to be here.
This is going to be actually quite fun. I think with your background and experience, we're going to tackle a number of great topics here. But I think the best way to begin this is just share with everyone a little bit of your getting involved in the community. How did you start out and become an accountant?
Well, actually, when I was in high school, I intended to go to school to become a veterinarian. And I decided that I didn't really want to go to school for 8 years. And so I thought I would take an accounting class after I got to Eastern Kentucky University. And I did, and I liked accounting, so that's how I decided that was going to become my major. Another part that always intrigued me with accounting is I always wanted to be in business for myself. I've always been entrepreneurial. And I saw accounting as a means for me to accomplish that, to be in business for myself or be an owner in a multi-owner business.
Well, I can't actually say that I see the similarities between a veterinarian and an accountant. So I find it fascinating that you went from that extreme of dealing with animals and obviously dealing with the health and, there's the biology behind it all, to then getting into the accounting. So what drew you to accounting that was perhaps meeting the same, goal of the veterinarian? Was it anything specific?
Well, two things but that are common between the veterinarians and the accountants would be here again, that entrepreneurial piece and owning my own business. Both of those I saw as professions I go into, own my own business. I always was good in the sciences. I was always decent in the math.
Excellent.
In high school. And I looked at accounting. Everybody thinks that accounting is all about math, but I have learned that accounting is not about math. It's about people.
100% agree.
And so, because I've read, I don't know how many scholarship letters and things from students when I've been on the foundation boards. Oh, I want to be an accountant because I'm really good in math and, my math skills. I'm thinking that's not the skills you need. We got calculators, we got computers that will do the math part of it. I need people that's got people skills.
Exactly.
Because you're dealing with folks' financial health.
I'm glad you described it that way, because when you're speaking, what comes to my mind is that of being a doctor and having a bedside manner. And what I mean by that is, as you're working with your business owner clients, you're revealing to them basically the results that are found in the financial reports that really tell the health and well-being of their business for which they're the guardian or steward of. And you're basically communicating as a doctor, where doctor is going to, the results of that information. And they have to make decisions now based on it. Does their company have cancer, or is it, needing to deal with back surgery? What's going on in this organization? So I like how you're describing this. And from a veterinarian point of view, you've got to have that bedside manner as you're working with the animals to keep them at peace. So as you're finishing your college then and having taken this track, you continued on to becoming a CPA. Why the push to be a CPA?
Well, to me, was a CPA certificate just opened the doors for you. I mean, it allowed you to take your career in whatever direction you wanted to go. I always, after I got into public accounting, decided that public accounting was where I needed to be and what I wanted. I was never really drawn to the private side of being a CFO, doing what I consider to be the same thing every day. On the 10th of the month, I got to close the books. In public accounting, what I do every day changes because I'm dealing with different clients every day. And that
Exactly.
just fit my personality much better overall.
Good. So you finish your schooling, you graduate, you become a CPA. What led you to then start your business? I think you mentioned you started this business. You went out on your own. Tell us about that.
Well, the one thing that's a little shocking to some folks is what made me decide to go on and start my business on May 1st of 1984. The firm I was working for, which was a sole practitioner, fired me. And I decided at that point in time that I was not going to be in that position again. I was going to take control of my destiny. And they're again wanting to be in business for myself. On May 1st, 1984 is when I started my own practice.
Well, you're nearing coming up here in a short time, that same time of the year. So it's almost an anniversary of sorts for you. So that's a thing. Congratulations. But what's interesting is I love how you described you lost your position and you chose to do the most obvious thing, which is hire yourself. You're now employed again. You hired yourself. So that's accomplished. You don't need to worry about finding a job. You're now employed. You work for you. So, what were you going to do differently in your business now that you're the one in charge that you feel that the industry needs to be offering the accounting community or the business community?
Well, what I found here again, it all goes back to the clients and having communication and conversations with the clients. Over the years, there's been a lot of folks that have said, "Well, I would have never guessed that you were accountant," when they first meet me. And to me, that's always a great compliment because that means they didn't think I had the green eye shade and the pocket protector.
Wow, there you go.
But I found out that if you can communicate with people and figure out what the people's pain points are, you've got to relate to them. You can't just be talking to them strictly about accounting stuff. You've got to understand and know what their family dynamics are, what their business dynamics are. It's more than just about the numbers. Now, yes, I've got to be the guy that's got to analyze and deliver numbers and talk to them about their financial health. But it's much easier to do if you can relate to them on a personal level.
Well, one of the things that I think is so important with what you just shared here is earlier you said it's a people business. Yes. But here I think what you're going to is really the crux of why these clients of yours are in business, their why, their family, their passions. And as you get to find that information out, you'll oftentimes learn things about them individually and their companies that no one else knows, not even their spouses, perhaps not even the other investors or the other employees. They're confiding in you things that you need and learn to help them now manage their business more effectively because you can ask more intelligent business decisions of them, helping them address things that they have in their company that are very important, but yet with whom would they have this conversation? And you've become that obvious choice. So I agree. What you're describing there is an often forgotten part of the accounting equation when we're offering these services. So you start your business in 1984. Tell us about the start. Was it easy for you? Did you grow it as you hoped and expected? What kind of things were you experiencing in those first few years of being in business?
Well, that first year was very tough because at that time the clients that I had access to, or I'd already done all their tax returns at the other firm.
Ah, yes.
So I had a little bit of a dry spell there getting to take off my business. But that all changed in 1985. I survived 84. In 85, I had a good tax season. And then on May 1st of 85, May 1st is an important date for me, it seems. The oldest practice in Richmond, Kentucky became available for sale, and the sole practitioner approached me about purchasing it.
Wow.
Which I did. And that allowed me to get out of my house because I started my practice in my house to keep expenses down.
Yep.
That allowed me to get out of my house and get moved into a small office, which really helped things greatly. Just having a storefront, it allowed me to pick up more clients more quickly than I could in my home because a lot of folks still didn't know I was there and available. It worked out really good for me because he had a lot of the old, well-established businesses in the area. I mean, the client that had been with him the least amount of time had been with him like 35 years.
Oh my heavens.
So, I picked up a lot of the old established businesses in Richmond, which really gave my practice the boost that it needed at that point in time.
So at this point, you're having a great second year. You're growing. Do you have employees now, having acquired that firm?
I did not have any employees until probably late in 85, and I hired my first receptionist at that point in time.
Awesome. Now, hiring someone is oftentimes a difficult transition because oftentimes it's impacting your own personal income when you're making that decision. When you brought on that receptionist, that was obviously now you stepping into this thing of no longer are you a solo entrepreneur, you have an employee. Can you recall what kind of mindset changes you may have experienced? Was there a bigger drive to get more clients to grow the business at that point? What became the focus of your attention, if you could?
Well, the focus of my attention at that time is I was growing. I had picked up the other practice, which kept me more than busy, but it also kept me from being able to go out and attend other functions and things so I could find more new clients.
Yeah.
It was a growth mode strategy for me all along. And you can only do so much work. And so that was a part of the impetus, to hire the person. Plus I was drowning. I mean, I just literally could not keep up with the work that I had to do. So I had no options other than to hire that person. And once you hire somebody, then in order to keep your income level, you have to go and find more work.
It's a vicious cycle.
Yeah.
So now you're in a position where you've got to grow, and that's going to necessitate hiring someone else, which is then going to compel you to grow some more and hire somebody else. So now that you're onto this thing where it's going to grow, what were you experiencing that was different than when you were just a one-man shop at the time in 84 and 85?
Well, the bills differential is the big thing. I mean, now all of a sudden you had all these office expenses. You had payroll, you had a lot of additional expense. So therefore, you had to grow, or your income suffered greatly. And my income wasn't that great to begin with. Of course, that was many years ago, and the numbers are not relative to today's numbers by any means.
Yeah.
But I was surviving, and that was what I wanted to do. I mean, I was doing what I wanted to do, and that I think that is the driver, especially for entrepreneurial people. That is probably as much of a driver as anything is.
I would agree. That is part of the compensation, is the independence, the freedom. There is something to be said, even though it's not a monetary gain. It is something that is very rewarding and satisfying. Just being the commander of your own destiny, kind of a thing, is something. So now you're in a position where you're growing your business. How does things then switch to Baldwin CPA?
Well, during that period of time, I had continued to grow my business, and actually, a person that I'd worked for in a large regional firm, he had gone to work for one of the clients, and he came back out and he started his own practice, and he approached me at that point in time about us putting our practices together, which we ended up doing, and that was in 1987. So we continued to grow those practices until he and I split our practices again in 1996. And one of my current partners came with me at that point in time. He had been an employee of the other practice. He came with me at that time, Myron Fisher. And that was in September of 96. And then I made him a partner in early 1998. It was January or February of 1998. And we continued to grow the practice. I mean, it was growing well. We had folks that, were looking to us to do their work, and we had more and more calls all the time. We were making more contacts, and the practice was moving in a very, very nice direction. Then in 2004, actually, somebody I'd gone to high school with, and him and his current partner, we got to talking about that we needed to merge our two practices. And our practices were probably within about 50, 60 yards of each other geography-wise.
Wow.
And so in August of 2004, we put our two practices together. We actually went to the cloud in order to be able to quickly transform our computer systems into one system. we went to the cloud in August of 2004, which is fairly early adoption for most anyone out there.
It was at the time, yes.
And so then we ended up with 4 partners in the firm. And then we merged, we was actually operating out of 2 locations at that time. And until we could get a place that we could move into, which we did that in December of 2005. We actually purchased the current building that we're in here in Richmond. The 4 of us did, and we remodeled it. It was a church building. We remodeled it into an accounting office.
Nice.
Kept the stained glass and other things, some things that, go to the history of that church building. And we've been here ever since. And then after that, it's just been over a period of time. We've done 7 or 8 mergers. All those have been successful, except one we did demerge. I wouldn't say that it wasn't successful. It's just later on everybody decided it was better if everybody just went back to doing their thing. And that's what happened. And everybody's still friends. And we still work on some projects together occasionally, even now. And we've just continued to grow and expand. And, that's how we've got 5 offices now. We've got one in Lexington, one in Louisville, Kentucky, one in Flemingsburg, and one in Maysville. And, of course, the office here in Richmond.
I love it. So I'm interested in getting into a lot of the story, the behind the scenes of this. But before I jump into this, I find it interesting that the metaphor earlier that we were giving is that of being a doctor and having good bedside manners, and now you bring up that you're actually in a remodel or refurbished church. So the other would quickly come to mind of now you've got your clients coming to give confessional as to how they misappropriated funds and how they need to be doing things differently in their business and excuse themselves for having made poor decisions in the company. I'm just kidding. So that's kind of funny. Anyway,
that's a good take on that, though, Roger.
Yeah. So come in. Let's have a confessional here real quick. So that's kind of funny. The thing that I'd like to focus on is, first of all, the mergers, and then I have another question after that. But regarding mergers, there are a number of the listeners here that have either experienced that or maybe considered merging in an effort to grow their business. What are some of the lessons you've learned now, having done a number of mergers, that would be great advice? What are some of the telltale signs that you're ready to do a merger? What are some of the telltale signs that the person you're perhaps going to acquire is prepared to be merged with? What are some of the things that are important, having done now these 5 or more mergers of your own?
Well, one thing we did is we came up with a list of non-negotiables. There's been 4 non-negotiables so far with all the mergers that we've done. And those are, number 1, I was going to stay managing partner. Number 2, the name was going to be Baldwin CPAs, because there's no Baldwin in our firm. That goes back to the old Baldwin up Church and Foley, which we merged with back in 2004. But Bobby had already left the practice at that time. That's the reason we decided to name it Baldwin CPAs. Then there's no question about whose names to be in there. We didn't have.
Good.
And as we looked forward, thinking that we would do more mergers, then the name becomes a non-issue because nobody's name that's a partner in the firm, his name's on the letterhead.
Good.
Type deal.
I understand. That makes sense.
So this was all thought out at that point in time in 2004. We also have a non-negotiable in the fact that it's going to be our processes that we're going to use with the new firm, because we go for a one firm concept, even though we're multiple offices. And then the other one is we're going to use an outside consultant to help facilitate the merger. And that probably, I would tell all firms, that's the best money you can spend. There's been mergers that I have not done because of what came out when that outside consultant was helping both firms go through the process and doing appropriate due diligence. And, the best job you do is to not merge than it is to do a bad merger.
Agreed.
It's better to walk away.
So that 4th point that you mentioned, having a third party, that mediator of sorts, that business consultant, them coming into the equation, when you introduce that individual to the prospective other party, how do you introduce them? What's the purpose that this business consultant is bringing to this discussion of a possible merger?
Well, this person that we use is nothing but that's basically what his practice is mergers and acquisitions.
Yep.
And he's known nationally. And I bring it into the folks because we've done some small mergers, some small sole practitioners in.
Mm-hmm.
And I say, we're going to use this guy. We're both hiring him. You're going to pay you're going to pay half the fee. I'm going to pay half the fee. And, he's working for you the same as he's working for me. And I had one firm tell me, well, nope, I'm not going to use him. I said, well, then we're done. And I turned around and it drove 3.5 hours. I turned around in 5 minutes and left that firm and never looked back.
Very good.
Because I just know it won't be successful in that situation.
So,
and I want everybody to have skin in the game. One thing I found with the mergers, this tells me a whole lot. If they're not willing to pay the fees to do this, then how serious are they? And that's another reason I put that as one of the non-negotiables, because I want everybody to be serious. There's no sense in wasting a bunch of time.
So how long is that relationship with this business consultant, both preceding the transaction, the actual merger, and then post the merger? How long do you actually have that consultant work with the two of you now as partners?
Well, realistically, once we get a letter of intent, the consultant is pretty much out at that point in time, because he helps with the negotiations on both sides. I mean, he interviews the partners in the other firm to find out why they're wanting to merge, and bring out the warts. He knows what our warts are, the idiosyncrasies of our firm, and he lays it out, and he's very blunt with regard to. He's very tactful with his bluntness, but he's very blunt with what he lays out to everyone. He'll come to me and say, Alan, I think you got a problem with this one, and here's why. Or he'll tell them that this is what you're not going to like with regard to this firm. This firm has got a corporate form of governance. They don't do things by consensus. You've got 11 partners. You can't operate that way.
Mm-hmm.
This is going to be a huge change for you because you're in a 2-partner firm. Can you deal with that change? And he vets those kind of things out before we, even get to the point of getting the letter of intent. Then from the letter of intent, he helps us lay out the letter of intent, and he will not let you leave when you're working on that letter of intent. So we was in one situation, and it come up about partner pay and something else. And they said, well, we can work the rest of that out after we get merged or whatever. He says, no, you do that today. If y'all can't do that today, then you don't need to go any further. And he sort of holds your feet to the fire, for lack of better terminology, and makes you accountable to do the things that we, as accountants, a lot of times want to put off and kick down the road. And that's the worst thing you can do when you're doing a merger.
Well, the nice thing of what I'm hearing you describe, and I've experienced it myself, is having that third party does help the discussions, because in the merger, you're not the person that's running the meetings. You're not the person you're not necessarily meant to be the one with all the answers. You're now on equal footing with the other partner, the other business owner, and the two of you are able to now just focus on the actual transaction rather than also running the meeting, asking the questions, facilitating the discussion. This third party is able to actually do all that. And so it, I think, allows things to speed up, and it allows you to address the things that have to be addressed, like you're discussing there, situations of compensation and so forth, that could be kicked down the road if one of the two of you were wanting to avoid the issue until later on, because there might be enough interest in having the transaction done that you're just kind of skipping or avoiding issues that need to really be addressed up front. So I like that you're describing that. Now, I find interesting that you said that after the transaction that you're not working with the business coach during the transition, the first, say, month or 2 or 3 of this. What have you done to implement in the transition a smooth transition?
Well, we have a team that we put together that will spend a lot of time in the other firm's office. We'll start that once the merger's announced. Even though we may not be to the merger date, we'll go on and start training. We'll start working on software. We'll train on software that maybe they're not using, that we're using something different. We go on and get that started immediately, and we'll have folks on the ground, boots on the ground in that other office for a good period of time after we do the merger.
Love it.
And, then it'll sort of gradually pull away from that. But then even during, after 6 months in, there'll be somebody up there occasionally for a day or two here or a day or two there, as we continue to bring that firm up to speed with the processes that we use at Baldwin. And also to make sure we're driving that one firm concept, because we want to be able to share folks, because of the age that we live in, tax returns could be done by anybody in any office. So they all have to be prepared the same way. It don't matter which partner you're preparing them for.
Mm-hmm.
We have processes that they all have to be processed the same way. And that's how we maintain that and work on that one firm concept.
Is there a particular software platform or technology that you're using that you're quite fond of that you can share with the listeners as to what you're finding to be very helpful as you've grown your business and you're at this level that you're at?
Well, we've not been a best of breed firm. We've been a Thomson Reuters firm since 2002.
Okay.
And some people like Thomson Reuters, some folks don't. It's Thomson Reuters and CCH are the two big players out there.
Uh-huh.
And one reason we ended up with Thomson is because they seem to have their software was integrated much better to speak to each other than some of the other platforms available. And when you go best of breed, sometimes you don't get that, software integration that you get by staying with one platform. We've been well satisfied with the platform. We've been on their virtual office product, which was how we went to the cloud back in 2004, since 2004. Now, in May of this year, we are actually going to move to our own private cloud because there's some other apps that we want to be able to start using that have become available that will actually integrate with their software that we cannot use inside of the virtual office. So we are in the process of moving to our own private cloud at some point here in the next 3 months.
Very good. Interesting. Well, I think what you've just described is very important because as people do grow their businesses, they're going to run into that same type of a question. And I can see them moving first to Thomson, as you've described, and then as you're doing now, then maybe even grow further to their own platform. Here's a question that I find quite common when I'm having this discussion with people about mergers and acquisitions is, when you're working with someone and you're merging as a company, here you are, a new partner is now part of the firm. On paper, things look good. The business, the acquisition, the clientele, the employees, everything's looking good. Tell me about the cultural fit and the personality fit. What have you experienced as you've brought these new players? Oftentimes, they're very savvy business people themselves. That's how they've grown their business. They're oftentimes very independent, may even be very engaging and high energy. How does that work at that partner level where you have so many partners, a lot of decision makers, not necessarily making all the decisions, but it's an interesting dynamic. How can you maybe relate to us what that's like and what some words of advice might be?
Well, the thing about that is, I think make sure you have your governance very well documented for your firm, and that everyone, as you're doing the merger, understands how the firm will be governed. Now, that doesn't mean that it happens overnight. Don't take that to be that at all, because it doesn't. Because it does take some time, because a lot of what we found is a lot of times as we bring these firms in, most of those firms necessarily haven't had what we call a one firm concept. Everybody does it all the same way.
Mm-hmm.
You tend to have, if you got a 3-partner firm, you'll have 3 silos in that firm. They're it's a little more maybe than sharing expenses under one common umbrella, but that's a whole lot of what's going on.
Yeah.
And, in our firm, that's not the case because, like I said, my tax returns that I'm having done may be being done in comes out of the queue and the person in Louisville picked it up and did it.
Yeah.
So, but when I get those work papers, they should all look the same as if they would come out of the Richmond office, out of the Flemingsburg office, or whichever office it came out of. And that's always been a tough piece of the struggle sometimes from the cultural standpoint, is folks giving up that personal preference on the way they wanted it to look. And so we always have to work through that. I'm not going to tell you we don't, because we do.
Mm-hmm.
And, as time goes on, most of the time they see the advantage of everything being cookie cutter is not a good word, but being the same. So when you pick up a work paper, it looks the same. It don't matter who prepared it.
Yeah.
And that is a big cultural difference from coming from a smaller firm, moving into a firm now the size of what we are.
Well, you've definitely standardized everything. And when you're talking about picking up a form and seeing things that you would expect, that's just because you have policies and procedures and processes that have been implemented throughout the company at the various offices. So I like how you're describing it, because for many accountants, that's a desirable. They like the continuity and they look for that same structure. So I think you're describing something that everyone would strive for anyway. With your partners, I'm assuming you have executive meetings and so forth. I understand you meet with them on a monthly basis. What kind of metrics do you look at or watch that are important in your business with these various office locations?
Well, one thing we look at is, of course, is gross revenues and do comparisons between the years, previous years, and where we're headed and where we projected that we would be, for this year. Salary expense is the one area, and the head count is the one area that is very, very important metric. We look at our dollars per full-time equivalent. A full-time equivalent, the way we compute it, is 2,080 hours. So you take the total hours and divide by 2,080 to get your full-time equivalents.
Mm-hmm.
And that's a very important metric, because the better we control that, the better our profitability becomes. And the more that we can do for the employees of the firm as well as the partners enjoy greater profits also. Those are a lot of the big ones, because a lot of your other costs and metrics that you could look at don't change that much.
Mm-hmm.
They're sort of fixed. I mean, your utilities are fixed, your rent's fixed. People say office supplies aren't fixed. They are. Office supply bill doesn't change much from one year to the next. Very little.
So when you have these meetings and you're looking at those metrics, do you do much from a leadership capacity to compel them and push them to this year be better than last year? Or is it more just working to try and meet a specific metric? What kind of leadership style do you gravitate to?
Well, yes, I watch the metrics probably closer than anyone does, and then I do have two folks on the executive committee, and we meet. We have changed that to where we're only meeting once every 2 months now,
Uh-huh.
because it was just taking an inordinate amount of time to do it every month. And I watch those and make sure I get those out. And if I see something that's alarming, I will go on and do a call to the whole partner group and say, hey, guys, we've got an issue here. We need to figure out what's going on. Why is this happening? Why is and most of the time that's a gross revenue standpoint, net production type number. Because the rest of them, I look at and control as much as anybody does.
Mm-hmm.
I'm sort of in charge of the head count. We look at what we need, and I'm watching revenues. I'm watching new business we're picking up, and to see if the head count is appropriate so that we can get the work done in a timely manner. But that falls back. That's sort of one of my things as managing partner. That I'm responsible for is profitability.
So within your organization, do the partners still retain client acquisition roles? Are they still involved with the sales and growth of the different
Yeah.
offices?
Yes.
Very good.
Yeah, we expect all partners to be selling, but some partners are not going to be good salesmen. I mean,
Mhm.
you've got partners that are salespeople, you've got partners that are technical folks. We have a process. We used an outside consultant, Gail Crosley, many years ago to help us with our business development.
Mhm.
We still use a lot of her techniques, and have worked very well for us over the years when we get leads and how we work those leads. Because we try and put the partner. It's not necessarily, you think, oh, I got a not-for-profit here, so that needs to go to not-for-profit partner. No, you need to look and see, okay, who's the people making the decision at that client, and who in our group will fit better from a personality standpoint. If they've got a female CEO, we probably need a female on this pursuit team. Or if we got a guy that likes to hunt and fish, Alan probably needs to be on that pursuit team, just because he's going to resonate with that guy that likes to hunt and fish, because you'll sell a lot more. You sell more from that aspect than you do from, a CPA to most people is a CPA. They consider us all to have the same education levels and to understand what we're doing.
Well, what you've done is you just brought it back to the same thing we started with, which is this is more a people business. the numbers at the end of the day are expected to balance. At the end of the day, we're expecting to see the financial reports produced with the same line items. What we're looking for is that bedside manner. We're looking for that rapport. We're looking for that connection. We're looking for that trusted advisor relationship. And as a CPA, if I can bond with you, if I can relate to you, if I can feel comfortable with you, then I'm more inclined to want to use your services and actually dive deeper into my own business because I like interacting with you. So I think you're 100% right there. Finding those connections and intelligently trying to bring the players within the firm to the table that are going to help retain that client. So that makes sense. Let me kind of ask about staffing for a moment here. Whether you're a small firm and you're just trying to hire the next person on the team, or like your office, you're probably dealing with a little bit more of a growth concern. How are you finding a great way to identify and bring the right accounting professional into the company?
If I could answer that question really well, I could retire tomorrow. That's probably the hardest thing that accounting firms are facing right now is the staffing issue. I mean, we do, thank goodness now we got to the size we could have a full-time HR person. And that has allowed us to, we're continually recruiting. And we're getting to the point that if we find somebody, if I get a resume across my desk that HR sends to me, even if we don't really have a spot available, I'm interviewing. And if this person seems like the next person that we might need to hire, I'll make a spot, because you can't let a good one get away.
Boy, that says a lot for the day in which we live right now.
Yes, it's a tough environment.
So for you, what stands out? What's that thing that really does make someone really stand out as a quality accounting professional? Yes, thank you. Yeah. So as you're describing this, one of the things that I'm curious about is what are some of the focuses that you have as a firm? Do you have a niche as to an industry you've chosen to focus on?
We've got about 3 or 4 large niches. Construction is one of our largest niches, probably is our largest niche.
Mm-hmm.
We do a lot of not-for-profit work. We do have a fairly large medical practice. We don't do a lot from the accounting and auditing side on medical. It's more the tax side.
Mm-hmm.
And then we do have a fairly large governmental practice.
Very good.
Those are probably our 4 biggest areas from a niche standpoint.
Good. Well, I'm going to take a moment right now and just break away for a quick second and mention our sponsor here. This has been a great conversation thus far, and stick around because I'm going to continue with some excellent questions that I'm sure you're all going to enjoy. But our sponsor is Universal Accounting Center, and today they have an offer that I think you all need to take advantage of, which is getting a copy of the book In the Black. This is a how-to guide for business owners to literally see what it is you need to be doing to be profitable. It's the 9 principles to become profitable, make your business profitable. And this is your opportunity to get a copy of the book so that you can literally see what 9 things you need to be focusing on within your own organization to make profit a priority and make it something that you can actually predict and become dependent upon. With regards to the book In the Black, it's an excellent read, but more importantly, it's a how-to guide that you can then take and implement with your clients as they work with you to help them actually implement these same strategies in their company as well. take the time, get a copy of In the Black. Go to the description of this podcast for the information that you need in order to get your copy today. Now, Alan, real quickly, one of the things that I wanted to do is ask this very simple question. Here it has been now 40 years since you've started this adventure. You obviously went into the accounting profession, and it's gotten you to the point where you're running a very successful multi-office accounting firm. You remember the struggles of 84 that you described, where it was a difficult year. You spoke of the start of hiring your first employee, the receptionist, in 85. Looking back at that individual, that younger you, what advice would you have for them as they were starting this journey that you now see where it got you? They were going to experience some trials, some struggles, and what advice would you give to your younger self?
Well, as my younger self, the advice I would give would have been, don't take every client that walks through the door. Even though you needed those dollars to help pay the electric bill, in the long run, it was probably not the best thing to do. Now I've survived all that, but that was the one thing that I can look back on my career and say is that I took clients that I should not have taken because they were too fee sensitive. I was never going to be able to make any money off of them. And so I ate up a lot of time with folks that I was not profitable on.
Mm-hmm.
And we all tend to make that mistake because you want that new client, especially when you're starting out, and it's a very emotional deal to get a new client.
So do you have a mantra or a quote that you use to run your business?
Yes. It's not necessary to change. Survival is not mandatory. That's by William Edmund Denning, the guy in the car industry.
Uh-huh.
And, change, if you're not willing to change, you're not going to survive in this industry. You're probably not going to survive in any industry anymore because, who would have thought the cab companies was going to be disrupted by a company called Uber and now Lyft? Cab companies thought that they had it made forever. The accounting profession is changing. The accounting work that we're doing is changing exponentially fast. And you better be ready to change. If you're not going to change, you're going to be like the dinosaur and you're not going to be here. You're not going to survive.
So what changes do you see on the horizon for the accounting profession?
Well, the technology changes are just getting exponentially faster. I think artificial intelligence is really starting to get a foothold with regard to, we're seeing it in the client accounting services space, where the invoices are being read by the machines and posted by the machines. We're seeing it in the audit space by analyzing large sets of data. Data analytics and artificial intelligence are two huge things in the audit side of the world that's being worked on and being perfected better as we go. And it's down into the smaller firms. This being able to work virtually and remote, you have to have in a firm to survive today because you got employees. I mean, we got employees a little bit everywhere.
Mm-hmm.
I've got an employee that I would have lost. She moved about an hour and a half away from here. But she asked before she did that, she said, is there any way I can continue to work here? And we said, yeah. The only thing is we have requirements. You have fast internet and we'll get you the equipment so you can work from home.
Wow.
And, if you aren't willing to make those kind of changes and accommodate, you're going to lose good people, and good people are hard to find, and you're not going to survive.
I have to agree with that. We had times, this is years ago, but as we started to have our employees work from their homes, we had an employee that ended up going to Guam and working remotely from Guam. We had an employee that left our corporate offices, which were in Utah, and she ended up going to Georgia. Had another employee go to North Carolina, and we've got basically employees now around the United States, and it's all because of technology. And if you go back 15, 20 years ago, that would have been unheard of. But today it's very, very common in the norm. And it brings its own challenges. There are different things that you have to address and deal with. But at the same time, it's nice to be able to have that flexibility. I've got a personal question for you. With regards to your legacy, you've been doing this now for 40 plus years. You've got obviously a thriving business. As you look back at the lessons you learned as a young man, whether it be from your mother or father or someone that was maybe an influential person in your life, what's a lesson you learned young that you still feel applies today?
Always have integrity. Your reputation, you've got to maintain that reputation, and because once you lose it, it's gone. Rebuilding it is almost impossible. And I learned that from my grandfather, from my dad, from a lot of folks, as I got older also. Always own your mistakes and just to have a high level of integrity when you're dealing with people.
Very, very good. I love it. Well, one of the things that I definitely appreciate, Alan, is you've been very open and forthright, especially with some of the things that you've experienced as you've grown your business. I'm sure the listeners have appreciated the fact that you've been very transparent as to the things that you felt were necessary as you chose to acquire and through mergers and acquisitions build your business. You've given us some great insights as to the technology and the philosophies you've used to manage your growth. So let me take a moment here and just mention one thing with our sponsors. I'm going to do a summary of this, and then I'm asked for a final thought on your part. So real quickly, from our sponsor, Universal Accounting Center, take advantage of the opportunity to get a copy of the book In the Black. It is the 9 principles to make your business more profitable. This book is specifically designed to help you as a leader address those things that are necessary for you to do in the short term, midterm, and long term to ensure your business is profitable. And more importantly, as you apply these principles in your own company, you'll then be able to actually assist your clients in implementing these same principles in their company so that you can, in fact, be for them their trusted strategic advisor. So get a copy of the book In the Black. Go to the description of this podcast or this episode. And with that description, you'll find the information you need to get a copy of the book today. The summary that I have of this discussion, I think, is quite broad. Alan brought to this discussion a great deal of experience, obviously having started his own business years and years ago. I'm sure many of our listeners can relate to that as they're starting their company, that it is difficult and oftentimes can be a challenge in that first year. Related to that, there's that growth of bringing on the first employee, and in Alan's case, it was that receptionist. But what was so critical was first we addressed the bedside manner, recognizing that this is a people business and working with our clients. We need to remember that they are individuals, and it does take some tact and some finesse when speaking with them to not only get them as clients, but then work with them and retain them. And then jokingly, we also identified the fact that sometimes when we work with our clients, it's also an element of a confessional in the sense that they may have to come in and explain themselves as to what's going on in the business. And as we help them take and use the financial information to make more intelligent business decisions, we're literally going to be able to empower them to move forward and basically navigate some of the challenges they're facing and really make their businesses more effective and productive. Now, one of the key elements of this discussion today with Alan was obviously the growth of his firm, choosing to go through mergers and acquisitions, that route of acquiring and growing the business. Now, one of the things that's important is he shared the value of working with a business coach to help vet with whom they may merge and actually help that process of onboarding and bringing these new individuals into the culture and also putting them on that platform that they need to be on to make sure the entire company is doing the work the same. I loved how Alan pointed out that he has 4 key things that are necessary to vet individuals to determine whether or not it's going to be a good fit. And I thought those points were very, very appropriate. Lastly, he had some excellent advice for hiring individuals and bringing on new staff. It is a challenge that we all face, finding and hiring quality and competent accounting professionals. And so take heed to that information. I hope you took good notes there. And then lastly, I love the point of integrity and being a man of our word. One of the things that we need to recognize is we are running our businesses is we will make mistakes and we need to be able to own it. And more importantly, be just very candid and direct with the clients we're working with so that they can really trust and appreciate the words that we're saying. So with all of that, that's a quick little summation of the things that we heard today. And I loved what you shared. Alan, do you have any final thoughts?
No, I just really appreciate you contacting me and being able to do the podcast. I really enjoy sharing with others in the profession, some of the trials and tribulations that I've had over the years and some of the successes I've had over the years. I really appreciate you reaching out to me and having me on this podcast today because every one of us can learn something from somebody else that's in our profession.
Agreed. Alan, it's been my pleasure. I think one of the things that I really appreciate about what we were able to share today is you're a down-to-earth kind of guy. And with that, I think a lot of our listeners can just really realize that their goals and aspirations of possibly building a firm like you have is very possible, because I think you just make it very realistic and very possible. So that is just the genuineness of what I heard in the conversation today. So thank you. I trust that this is something that as people hear it, they'll gravitate to you. So be mindful of that. But with all of this in mind, just remember this, everyone. If it's about accounting, it is universal. We appreciate you taking the time to listen to our podcast today. Definitely take the moment to subscribe to the podcast and listen to our other episodes as we share tips and tricks and suggestions as to how you can actually focus on your business to be the premier accounting firm in your area. The purpose of this episode is literally to help you get the information you need to make those changes that you're wanting to make with confidence and competence. The other thing I would encourage you to do is to visit us at Universal Accounting, going to universalaccountingschool.com to find different information that you can use and apply within your company. And lastly, feel free to give us a phone call. You can reach us at 801-265-3777. Thank you, everyone, for joining us today. Take care. Have a wonderful day. And remember, accounting success is universal. Take care.